This past week, the US stock market had its biggest down day of 2019. So what does that mean? Is the recession coming? Is there more movement to the downside coming in the future? Well, I have 3 indicators that I'm going to show you in this video that are pointing to me that we are headed for more movement lower. If you take a look here at the chart with me, we're going to start on the daily time frame. Yesterday, as most of you probably know, was Wednesday, August 14th, was the biggest sell-off of the year so far in the US market, in the US stock market. That can kind of create a lot of panic in people to say, hey, is this actually a sign of a recession? Are we headed into a bear market? Well, my response to them is check the chart. Check the technicals. Because if you use technical analysis properly, it can tell you what's going to happen more often than not before it actually happens. Let me show you how you can do that. So if we zoom out and just take a look at 2019 as a whole, you can see from the start of the year on, we are positive. Start of the year came in after that, if you remember, late 2018, basically market sell-off. We sold off about, let me measure exactly, about 20% in the last 90 days of the year. So it was a pretty big drop as far as, how much an index would move. Now, since then, we've recovered and basically kind of chopped our way sideways in the same price zone that we chopped at the high of 2018. Now, if I take it a little bit more specific for you, I'm going to show you the exact zones that you should be paying attention to. So if we go back to that high of 2018 right here, September 21st, I like to draw my zones using pins. So I have a candle rule, I call it the 2-candle rule, that I'll use to draw my zones. Now I know that's a little small, so let me blow that up for you. But what I did was I took that high of the year and used the pin high on that day to create my resistance zone. What I'll do then is double click this and send it all the way across by using the coordinates like that. So now I can see that support zone going all the way across. Now when we come from 2018 into 2019, you can see here at the beginning of May when we reached that same zone, what happened? We consolidated sideways a few days, had a huge down day in here, and then ended up pushing back down off it, just like we did the last time we reached there. So this price of $29.40 basically was very, very, very significant. So when we bounced off of it, sold off a little bit, and came back to it, people were ready to see it then push down off that level even more for the 3rd, 4th time, whatever it may be. But it didn't. It ended up coming higher. And as it retraced itself down, when we had this huge gap back down through at the beginning of August, people started to get worried. When we came back down to that price sensitivity zone, people are getting more nervous to say, okay, if we hold the zone, then we could be moving higher. If it could have stopped above the zone at $29.45, $29.50, that could have signaled to us that we might be consolidating before another move higher. But the fact that we gapped down and now have retested that zone and now had our biggest down day of the year after retesting that price zone, to me, this future chart is going to have a hard time breaking $29.40. Now let's take it a little bit further. Where could it move to the downside? Well, again, using that 2-candle rule, let me show you how exact these zones can be. If we take another rectangle tool, let's look at this pin down here. Let me move the date for you. Move that box. This pin created on March 8th. If we use that zone, move this right there. If we use that zone, carry it forward, you can see the second time we came down to it, a few months later, June 3rd, it didn't even break it, pinned it, and moved right back off of it. So what that signals to me is that this could be another zone of price sensitivity. So now that we have 2 major zones drawn on the daily time frame, there's 2 things we can do. One, you can stay and use these daily zones as your support and resistance levels, or you can take it down to the 4-hour, down to the 1-hour, and start to identify even more specific zones on smaller time frames. But for the purposes of this video, you've now seen how I draw my support and resistance zone using those wicks. You understand that we move down from the higher time frames to the lower time frames to do the best analysis possible. We can then, if we want, come in and even add in some basic trend lines to help us identify what price action could potentially do in the future. So if we take the 2019 low, start of the year, and connect it to that low in June where we retested the zone, you can see very clearly the bullish trend that started at the beginning of the year, January, February, March, April, May, June, July, and now in August, it's now being broken. That uptrend was there, the bullish momentum was there, but that has now been broken, retested, right? Not only did we retest that price zone, but we also retested the trend line here. So now 2 levels of confirmation to tell me that we could move down. Now, the third thing that's really making me believe really making me believe that we're going to see movement even lower from this 28.44 level here is the TDI. So when I add in my TDI, which is an RSI combined with 2 moving averages, I can use the RSI piece of the TDI to help me spot divergence. If I blow this up a little bit bigger here, just so you guys can see it, the RSI high was set on April 30th of 2019. If I come to price action to that same point, and I use April 30th and I draw a trend line to the price action high, which was set here on July 16th, and I use those 2 levels and I draw trend lines on both the TDI and price action, I can spot what we would consider divergence. The divergence tells me the RSI is falling, but price action is rising. In situations like that, when divergence does build, you normally will trust the TDI. 99 out of 100 times, I'm trusting the TDI in a situation like this, where if it's telling me that we're moving lower, even if price action is moving higher, I will trust the divergence that's presenting on the TDI, because the TDI don't lie. And when it presents something like this, and we start to see market sentiment falling, the RSI value being under 50, plus us retesting these zones, not only zones, but also breaking trend lines. Not only are we doing price action confirmation here, but now you have technical indicator confirmation that's telling you we're probably going to see more movement to the downside. So again, the 3 major things that are telling me we probably, I'm never going to say for certain, but probably will see more movement to the downside throughout the rest of the month into September, I believe, is 1, the price sensitivity zone set way back in 2018 that we broke with a gap down, retested, and then had our biggest down day off of that after the fact, after the retest, right? Not only that, but we broke the trend line that had been created and held all year long. And third, the TDI showing us that divergence, presenting to us that we look to be moving down in the future. Strength is moving down. Market sentiment is moving down. So even if price action had that last little fake pop here at the end of July into August, that's fine. But now as price action is starting to fall back in line with that divergence, we're most likely going to see more movement in that direction. So I hope you learned something in the video. Drop a comment if you agree. Drop a comment if you disagree. I'm always down to hear some healthy conversation about it, but I will keep you guys posted on this analysis. I'll keep making videos about this so we can stay on top of it and learn together. And like I said, let me know what you think, and I'll see you guys in the next video.